So ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is a Kickstart video where I take a look at the three major currency pairs: the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar to kickstart your trading day. Let's start by taking a look at the euro versus US dollar. This is the hourly chart, and from this high to this low right here, the price moved above the 50% retracement over the last few trading days, actually trading above and below that level. And in the process, we moved up to this swing area up through here, which had a number of different swing lows, through this level here before moving to the downside. We returned to that area and we found sellers yesterday in what was an up and down trading day, and trading here today the price moved back to that level and moved above that level, but fell short of the 61.8% retracement of the same move down from this high to this low. The price has since moved sharply to the downside after the CPI data came in stronger than expectations, and we are currently trading right around the 100-hour moving average after breaking below the level and moving to the broken 38.2% retracement level at 1.05709. So we're trading right around the 100-hour moving averages. This and the 38.2 are going to be barometers for more bullish above, more bearish below. And it also reestablishes this level around the 1.0608 to 1.0616 area as a key level, a key ceiling level. I've been talking about this level for a while, since we moved back up toward this level in the last few trading days, and also going back to the daily chart. Recall the 38.2% retracement of the move up from the September low right here to the July high came in right in that area near 1.06106. So if you can just go back to the hourly chart and think of that 1.0610 in between, in this yellow area, in between the high and the low of that yellow area, that's where now the ceiling exists after the CPI data. The CPI data voted. It was stronger than expectations, and that's leading to the US dollar moving a little bit higher. If we move back above that level, then all bets are off. Maybe the markets are not looking at the CPI data as being a problem. It's continuing to focus on the Fed, saying that pipeline hikes are still yet to be heard from the economy, that the economy is going to slow, so on and so forth, and that's going to lead to a lower dollar. We will see, but the 1.0610 area is going to be a resistance now. We'll pay attention to that level in trading here today and going forward. In between or on the downside, watch the 100-hour moving average at 38.2. If we move below the 38.2% retracement, we're likely to head down toward the 200-hour moving average, which comes in at 1.05446. Let's now shift out to the dollar versus yen, and it is higher, or it moved higher after the CPI data, the highest level for the trading weekend, looking toward the Friday highs. Remember, this spike came after the U.S. jobs report, moving up to this swing area here, helping to form this swing area between the 149.47 level and 149.54 level. This level is defined by a number of different swing highs through here, where the price found willing sellers. Then we moved above the level and started to find support against it before moving back down. We returned to the level in trading last Friday, and that is where the price high is headed toward after the CPI data, 149.47, 149.54. If we get above that level, then we look toward this high going back to, I guess that's September 27th at 149.70, and start to then look toward the swing highs that took the price all the way up to 150.15. Recall this was after the JOLTS data, where the price finally moved above the 150 level, and then we proceeded to rotate about 280 pips all the way to the downside, testing the September's low here before rotating back to the upside. Now, on the downside here, what we're running away from is the 200-hour moving average and the 100-hour moving average. The low price in trading here today and the low price right here before moving higher, stalled against the 100-hour moving average. That increases that level's importance going forward. Those levels come at 149.07, 148.93. Move below those levels opens the door for the 50% retracement level, which we have seen more ups and downs around that level over the last few trading days as the market prepared for the CPI data back here after the sharp move to the downside. We did find support against that level. And it's been a point of reflection or deflection for the most part. Whenever the price moved below, it went lower, and whenever the price moved above it, it went higher. And you can see that in this type of price action through here and here and here and even here. I mean, it became more and more subtle, but you can see how the price rarely traded around the 148.73 level. It sort of moved away from it, and that's what you look for in certain price levels as well. So the 50% retracement is something to pay attention to. But right now, the buyers are more in control, looking to get above the 149.54 level to open the door for further upside momentum. Let's take a look at the sterling versus US dollar, and it too fell after the CPI data after trying to hold the 50% retracement level of the move down from this high right through here to the low price that we saw down here. That 50% retracement comes in at the 122.919 level, and that level is now going to be a resistance level. But the 100-hour moving average is going to be a key barometer in trading here today. As you can see, move down to test it here, also near this swing area through here. Number of different swing lows and swing highs between the 122.61 and 122.758. So traders are going to watch this. Maybe the 76 level is resistance now, but we need to get below the 100-hour moving average to tell the sellers that, yes, this is the way to go for this currency pair from a technical perspective. If we can't do that, then the buyers are still in play here, folks. So key level in trading here today, 122.55 is where that 100-hour moving averages. Get below it, and we'll start to look toward the 38.2% retracement. Start looking toward this swing area through here, a number of different swing lows and swing highs through here. Pretty good level there. As a matter of fact, we did break a little bit before to the downside here before moving to the upside, but the 122.19, 122.31 level is another key level on the downside, followed by the 200-hour moving average at 121.906. So there you have it, a Kickstart to your Forex trading, looking at 3 of the major currency pairs. My name is Greg Michalowski. Good fortune with your trading today. Bye-bye now.